But on the other side, we had Godrej Consumer, which is doing well in today's trading session, up almost 2%, and this after the company reported a near perfect set of numbers. You know, it met analyst expectations, which of course were set by the company itself in their fourth quarter update. A good growth is what we saw in the company's top line. The EBITDA actually went ahead, a step ahead of what the analysts were estimating, and as a result of which the margins hit that 20% mark, and the net profit also was above expectations as well. What really stood out for me this time around was the 400 basis points improvement that we saw in the margins, which was led by 340 basis points gross margin improvement, and secondly, other expenses were down by about 80 basis points as well, so that aided the company. Importantly, their ad spends increased by 70 basis points, and that the company said is looking to show results into the way their business is growing. And business is indeed growing. The domestic volume growth for them was up by 11%, and that's the highest that we've seen in the FMCG pack so far in this quarter. And the company believes that, on a consolidated basis, the volumes which grew by about 6% in Q4 are likely to grow in high single digits in all of FY24 with margin expansion that continues. Brokerages like it. Goldman Sachs has a buy rating with a target of 1150 rupees on the stock. They believe that the turnaround story for the company is fully underway. The big trigger for them, however, is the way they scale up the Park Avenue and Kama Sutra brands that they've brought from Raymond's consumer stable right now. So that is something that the management said to us that, we'll see a scale up in the second half of this year. We will see some synergies coming in, and the margins of that business, which were low single digits, will move to 25% by FY25. In fact, Samir Shah, the CFO of the company, spoke to us today, and here's what he said.
We did call out earlier that one of the major reasons for weak consumer sentiment was inflation, and now inflation is receding in some of the staples within FMCG category. And we are seeing those price drops, which in turn is also now propelling growth, at least in those categories. So yeah, consumer sentiment seems to be, kind of gradually improving. Definitely, we'll continue the momentum which we have seen in our business, not just last quarter, honestly, but for last now couple of quarters. And we do expect gross margin expansion in FY24 over FY23. The latter part of FY23 did see a gross margin expansion. But we will continue to see gross margin expansion throughout FY24. We will continue again with category development initiatives and hence higher working media investments, which again, are seeing results now in terms of the kind of volumes growth which we have seen in India, say in last quarter. We will see what we call as basket of controllable cost reduction. Again, we saw, I think, close to 200 bips of reduction in controllable cost in FY23, and we will see meaningful reduction again in FY24. We definitely do see a very meaningful distribution synergies, and also, by the way, there is equally meaningful cost synergies. But as we had called out, post acquisition, that maybe we take first 6 months as is, and then we see, both distribution synergies as well as cost synergies, and eventually into the overall performance, which my senses will pan out, in second half of the year, because first 3-6 months, we just want to absorb it, just have our own internal, kind of plans in place, and then see all the synergies getting played out in terms of end results, which I think will start from second half of the year.
Okay, so that's Godrej Consumer. A lot of stocks in focus on account of numbers.